Imagine this. Energy prices are soaring. Entire industries are shifting to cleaner fuels, and governments are pouring billions into energy independence. Now, picture this. You invest $10,000 and watch it grow into $100,000 as this supercycle unfolds. The opportunity is here. Will you grab it, or will you let others walk away with the profits?
We're standing at the edge of the next energy revolution. Two sectors are leading the charge: LNG, or liquefied natural gas, and lithium, the backbone of electric vehicles and renewable energy storage. These markets aren't just growing, they're exploding. But if you're not in position now, you could be watching from the sidelines as others capture life-changing gains.
This episode is all about turning that opportunity into action. We'll explore the trends driving the energy supercycle, break down why Condor Energies, Qatar, a company targeting 239% upside, is one of the most exciting stocks in this space, and give you strategies to profit from this shift while managing risk.
The truth is, energy markets are in crisis mode. Europe is scrambling to replace Russian gas, and Asia is increasing LNG imports to fuel industrial expansion. At the same time, the push for electric vehicles and green energy storage is creating a massive lithium supply gap. Countries and corporations are racing to lock in supplies, and investors who act early could see triple-digit returns as demand outpaces supply.
Here's what the data says. LNG demand is projected to grow by over 12% annually, fueled by global energy shortages and the transition away from coal. Meanwhile, lithium demand is expected to quadruple by 2030, with the EV battery market driving most of that growth. These aren't just market trends, they're multi-billion-dollar opportunities for early movers.
And that's where Condor Energies comes in. With operations in Central Asia, Condor is building LNG infrastructure to supply growing industrial markets while advancing lithium extraction projects designed to serve the EV boom. This dual strategy positions Condor as a two-in-one growth engine, capturing both short-term energy security demand and long-term renewable energy expansion.
Let's talk numbers. Condor stock is trading at $1 CAD and 84 cents, with analysts targeting $6 CAD and 25 cents. That's a 239% upside potential. And with a risk-to-reward ratio of 113, Condor isn't just an opportunity. It's a calculated bet with massive payoff potential.
But this isn't just about a stock pitch. In this episode, we'll give you tools to hedge your risks, amplify gains using options, and even track commodity prices with AI-powered trading platforms. Whether you're a long-term investor or a high-speed trader, we'll show you how to build a winning portfolio around this energy transition.
Energy supercycles don't come around often. The 2000s oil boom turned early investors into millionaires, and we believe LNG and lithium are the next frontier. Don't wait for the headlines. By then, it'll be too late. Stay tuned, because in just a few minutes, we'll break down Condor Energies, show you why it's positioned for 10x growth, and outline exactly how to profit.
Stick with us, because by the end of this episode, you'll have the insights and tools to profit from the energy transition, and you'll understand how Condor Energies could be your gateway to explosive returns. Don't forget to subscribe on Spotify, Apple Podcasts, or follow us on Twitter for updates and new opportunities.
To truly understand why LNG and lithium are at the center of the next energy supercycle, we need to take a step back and look at the forces driving this market transformation. Right now, we're witnessing the largest energy transition in history, fueled by climate policies, geopolitical instability, and the global race for energy security. And when markets shift this dramatically, fortunes are made.
Let's start with LNG, liquefied natural gas. The world's energy supply chains are under pressure. Countries in Europe are rushing to replace Russian pipeline gas, and Asia is importing record volumes to fuel industrial expansion. LNG has become the go-to fuel because it's cleaner than coal, cheaper than oil, and flexible enough to transport globally. That's why LNG demand is projected to grow at a 12% compound annual rate through 2030, making it one of the fastest growing energy sectors in the world.
And it's not just short-term demand. This is structural growth. LNG isn't a temporary fix. It's the transition fuel bridging today's fossil fuels with tomorrow's renewables. Even with massive investments in wind and solar, the world still needs reliable backup power to avoid blackouts. That's where LNG fits in, and companies like Condor Energies are developing the infrastructure to deliver it.
Now let's shift gears and talk about lithium, the metal that's powering the EV revolution. The global push toward electric vehicles and battery storage is creating unprecedented demand for lithium-ion batteries. Bloomberg predicts that EV sales will grow from 10 million in 2022 to over 40 million by 2030. And every single one of those cars needs lithium.
Here's the problem. There's not enough lithium supply to meet demand. Global production needs to quadruple by 2030, but supply chains are already stretched. Prices have been volatile, and lithium shortages are threatening to slow EV adoption. That's why companies like Condor Energies are stepping in to fill the gap. Their 37,300 hectare lithium brine project is focused on using direct lithium extraction (DLE) technology to produce lithium faster and more efficiently than traditional methods.
And don't forget the geopolitical angle. Over 70% of lithium refining capacity is controlled by China, creating supply chain vulnerabilities for the US, Europe, and Japan. Governments are racing to diversify, pouring billions into domestic production and supply security. Condor's Central Asian location gives it a strategic advantage, close to both Asian markets and European demand hubs.
Let's talk numbers. LNG markets are expected to grow to $220 billion by 2027, driven by infrastructure expansion and rising energy costs. At the same time, the lithium market is forecasted to grow at a 13.9% compound annual rate, hitting $27.3 billion by 2028. These projections aren't hype. They're backed by the biggest global trends shaping energy and technology.
But what does this mean for investors? It means that Condor Energies is positioned to ride both trends, capturing short-term cash flows from LNG while scaling up for long-term growth with lithium. This dual threat model isn't just rare, it's exactly what investors need in today's volatile energy markets.
And timing matters. LNG prices are still high due to supply disruptions, and lithium shortages are creating pricing spikes that benefit producers. Investors who wait risk missing out as infrastructure projects are completed and production ramps up. Companies like Condor, which are already advancing projects, have a first-mover advantage, but only if you act before the market catches up.
So what's next? In the next segment, we'll take a deep dive into Condor Energies, breaking down their financials, growth drivers, and why analysts are forecasting a 239% upside. Stick with us as we explore how this stock could deliver 10x returns in the energy supercycle. And don't forget to subscribe on Spotify, Apple Podcasts, or follow us on Twitter to stay ahead of the trends.
Now, let's talk about the stock at the center of this energy supercycle, Condor Energies, ticker symbol CDR. This company isn't just riding one trend, it's attacking two of the biggest profit opportunities in energy today: LNG infrastructure and lithium extraction. And with a projected 239% upside, Condor could be the breakout star of this energy transition.
Let's start with LNG. Condor is building 2 LNG facilities in Kazakhstan, targeting transportation and industrial markets that currently depend on diesel fuels. LNG is cheaper, cleaner, and easier to transport, making it the go-to fuel for regions pushing for energy independence. With LNG demand growing at over 12% annually, Condor's infrastructure projects are perfectly timed to capitalize on this trend.
And it's already paying off. Condor reported a 13% production increase in December 2024, hitting 11,354 barrels of oil equivalent per day. Body. This growth came after deploying 3 drilling rigs and completing seismic analysis for its 2025 drilling program. The company isn't just talking about expansion, it's delivering results and scaling fast.
On the financial side, Condor raised 19.4 million Canadian dollars in late 2024 to fund its LNG infrastructure and lithium operations. That capital ensures the company has the resources to scale production without taking on excessive debt, a critical factor for growth-focused investors.
Now let's turn to Condor's lithium opportunity, the other half of its dual threat strategy. The company controls a 37,300 hectare lithium brine project designed for direct lithium extraction, DLE, a faster, more cost-efficient process than traditional lithium mining. With lithium demand expected to quadruple by 2030, Condor is positioning itself as a key supplier for the EV battery market.
And here's what makes this even more compelling. Over 70% of lithium refining capacity is controlled by China, leaving Western nations scrambling for new suppliers. Condor's Central Asian location gives it a strategic edge, providing access to both European EV manufacturers and Asian demand hubs. This isn't just about growth, it's about becoming a critical player in global energy security.
Let's talk numbers. Condor's current price is $1 Canadian and 84 cents, and analysts are targeting $6 Canadian and 25 cents. That's a 239% upside. Even at its low target of $1 Canadian and 50 cents, the downside is just 18%. That gives Condor a risk-to-reward ratio of 113, meaning every dollar of risk delivers $13 in returns. These are the kinds of numbers investors dream about.
Valuation-wise, Condor's price-to-sales ratio is well below industry averages, signaling it's undervalued compared to its peers. And because it's reinvesting profits into scaling LNG and lithium operations, it's a growth-first company, exactly what we want in a supercycle stock.
Of course, there are risks. Commodity prices can be volatile, and Condor faces execution risks tied to building infrastructure and scaling production. But here's the difference. Condor is already delivering results. In less than 10 months, it reversed a 20% production decline, secured funding, and expanded drilling. That kind of execution separates winners from laggards in energy markets.
So what's the play here? For long-term investors, Condor offers exposure to both immediate cash flows from LNG and future growth from lithium. For active traders, it's a high upside bet with built-in momentum and multiple catalysts, from production growth to new infrastructure announcements.
We're not done yet. In the next segment, we'll break down the strategies you can use to profit from Condor. Whether you're buying shares outright, trading options, or diversifying with ETFs. We'll also cover AI tools to help track commodity cycles and optimize entries. Stay tuned, and don't forget to subscribe on Spotify, Apple Podcasts, or follow us on Twitter to stay ahead of the trends. We've laid the groundwork. LNG and lithium are powering the energy supercycle, and Condor Energies is positioned for massive upside. But knowing the trends and the stock isn't enough. Now it's time to talk strategy, how to maximize gains, hedge risks, and lock in profits. Whether you're a long-term investor or an active trader, this segment gives you the tools to make money.
Let's start with the simplest approach, buying shares outright. For long-term investors, Condor Energies offers direct exposure to LNG cash flows and lithium's growth potential. With a 239% upside target, the strategy is straightforward: buy and hold as Condor scales operations. And remember, timing matters. Getting in early before production peaks gives you the best shot at capturing explosive gains.
But what if you're looking for higher returns with lower capital? That's where options trading comes in. Call options let you control more shares with less money, amplifying profits if Condor's stock price climbs. For example, buying 6-month call options can generate outsized gains as catalysts, like production updates drive momentum. And to hedge downside risks, you can pair calls with protective puts or stop-loss orders to lock in gains.
For investors who prefer diversification, ETFs focused on LNG and lithium can spread risk across multiple companies while still benefiting from the trends. Look at LIT, which targets lithium mining and battery production, or UNG, which tracks natural gas prices. These ETFs allow you to ride the energy supercycle without putting all your capital into a single stock.
And let's not overlook AI-powered trading tools. Platforms like Quant Connect and Trade Ideas can analyze patterns, track commodity cycles, and even automate trades based on market signals. For volatile sectors like energy, AI tools can give you an edge by identifying entry and exit points faster than manual analysis.
Now let's talk hedging strategies. With energy prices prone to sudden swings, you can use futures contracts to lock in prices or speculate on movements. This works especially well during supply disruptions, where prices spike and traders profit from volatility. Hedging isn't just about protection, it's also a tool for maximizing returns.
And if you're looking for cash flow while you wait, pairing Condor Energies with high dividend energy stocks can stabilize your portfolio. Stocks focused on LNG infrastructure or established lithium producers can generate steady income, while Condor delivers higher growth potential.
Don't forget position sizing. High growth plays like Condor should make up 5 to 10% of your portfolio, enough to move the needle without overexposing you to risk, and use a scaling strategy, buying shares gradually instead of all at once to average out your cost basis during volatility.
We also recommend setting profit targets and exit strategies in advance. With a 239% upside, you may want to take partial profits at key levels, say 50% gains, while holding the rest for longer-term growth. That way, you can capture profits while letting your winners run.
And what about short-term traders? Condor's momentum potential makes it a candidate for swing trades, especially during news releases, earnings calls, or production updates. Use technical indicators like moving averages and RSI levels to time entries and exits.
For long-term holders, the focus is on fundamentals and growth milestones, like drilling updates, infrastructure completion, and lithium extraction reports. These catalysts can drive the stock higher, but the key is staying patient and disciplined through volatility.
In the next segment, we'll step back and look at case studies from past super cycles, how early investors in oil, gold, and renewables made 10x returns, and reveal business ideas tied to LNG and lithium. Stick around and don't forget to subscribe on Spotify, Apple Podcasts, or follow us on Twitter for updates on future opportunities.
History doesn't just repeat, it teaches. And when it comes to energy supercycles, the lessons are clear. Early investors who spotted trends in oil, gold, and renewables walked away with 10x returns, and sometimes much more. In this segment, we'll break down past winners, show you what made them successful, and highlight business ideas tied to the LNG and lithium boom.
Let's start with oil's supercycle in the 2000s, when oil prices climbed from $20 to $140 per barrel. Early investors and producers like ExxonMobil and infrastructure companies like Cheniere Energy saw their stocks triple and quadruple. The drivers: global demand growth, supply constraints, and the need for energy security, exactly the forces driving today's LNG and lithium markets.
Take Cheniere Energy as a case study. It pivoted to LNG early, betting on global trade growth and infrastructure bottlenecks. Investors who recognized its potential made 500% returns as the company became one of the largest LNG exporters in the world. Condor Energies is following a similar roadmap, building LNG facilities to supply transportation and industrial markets, while scaling production to capture price spikes and shortages.
Now let's look at lithium, specifically Albemarle Corporation, one of the world's largest lithium producers. Over the last 5 years, Albemarle stocks surged more than 300% as the EV revolution took off. But lithium demand is still outpacing supply, creating new opportunities for early-stage companies like Condor to step in with innovative solutions like direct lithium extraction, DLE technology.
The takeaway: investors who spot infrastructure gaps and technological shifts early can capture outsized returns. Condor Energy's combines short-term LNG revenues with long-term lithium growth, giving investors exposure to two high-growth sectors in one stock.
But it's not just stocks. The supercycle is also fueling new business opportunities. Let's look at 3 ideas you can use to profit from the LNG and lithium boom.
The first opportunity is building or investing in AI-powered trading platforms for commodities. AI tools can predict price trends, analyze supply chains, and execute trades automatically. Imagine creating software tailored to track LNG shipments or lithium supply bottlenecks, giving traders an edge in volatile markets. Subscription models and data licensing could make this a recurring revenue business.
Companies are under pressure to cut carbon emissions and transition to clean energy, but many lack the expertise to make it happen. Starting a consulting firm focused on helping industries integrate LNG, optimize supply chains, and adopt energy storage solutions could generate high-ticket contracts and long-term partnerships.
The third idea targets infrastructure investment, building out micro LNG facilities for local markets or developing modular lithium processing units to supply regional EV manufacturers. Investors can partner with engineering firms or even raise funds to back construction projects in emerging markets, where energy shortages are most acute. History doesn't just repeat, it rewards those who pay attention. When energy supercycles hit, early investors who position themselves before the wave can see 10x returns or more. We've seen this with oil booms, gold surges, and even the rise of renewables. In this segment, we'll break down past winners, what made them successful, and reveal business ideas tied to LNG and lithium that you can use to ride this supercycle.
Let's start with oil. During the 2000s oil supercycle, prices skyrocketed from $20 per barrel to over $140, creating massive profits for investors who bet early on producers like ExxonMobil and infrastructure players like Cheniere Energy. Cheniere didn't just survive the shift, it thrived by focusing on LNG exports, turning early investors into 500% winners as LNG demand exploded globally.
Now, look at lithium. Companies like Albemarle Corporation, a leader in lithium production, have seen their stock prices jump by more than 300% over the last 5 years as electric vehicles took off, and the trend is still accelerating. Lithium demand is expected to quadruple by 2030, leaving a supply gap that could drive prices and profits even higher.
What's the common thread? Both oil and lithium booms were fueled by demand shocks and supply shortages, exactly what we're seeing now with LNG and EV batteries. Companies like Condor Energies are positioned right in the middle of these trends, combining short-term LNG revenues with long-term lithium growth for a dual threat opportunity.
And here's where it gets exciting. Condor isn't just producing energy, it's building infrastructure to scale production. With 2 LNG facilities under development and a 37,300-hectare lithium brine project, it's targeting 2 of the fastest-growing markets in the world. The result? A 239% upside potential and a 113 risk-to-reward ratio, exactly what smart investors look for.
But supercycles don't just create stock opportunities, they also fuel business ideas that can ride these trends. Let's look at 3 ideas tied to LNG and lithium that you can turn into profitable ventures.
First, AI-powered trading tools for commodities. The energy market is volatile, and traders are willing to pay for software that can predict price trends, track supply chains, and automate trade. Building AI platforms focused on LNG and lithium markets could generate recurring revenues through subscriptions and licensing.
Second, consulting services for energy transition. Companies are under pressure to cut carbon emissions and adopt clean energy, but most don't know where to start. Offering advisory services for integrating LNG, optimizing supply chains, or improving lithium sourcing could generate high-ticket contracts and long-term revenue.
And third, infrastructure development projects. Investors can partner with engineering firms to build micro LNG facilities or modular lithium processing plants in regions facing energy shortages. These projects don't just generate profits, they position you as part of the clean energy supply chain.
Fourth, lithium recycling businesses. As EV adoption accelerates, demand for recycled lithium-ion batteries is skyrocketing. Launching a battery recycling plant or partnering with automakers to recover lithium could tap into this fast-growing sector while solving supply bottlenecks.
And don't overlook mobile energy storage solutions, portable battery units for disaster relief, remote locations, and renewable grids. With lithium at the core, this business could scale quickly by targeting industries that need temporary or backup energy sources.
The key takeaway: whether you're investing directly in stocks, launching AI tools, or building infrastructure, this supercycle offers multiple paths to profit. The opportunity isn't just about commodities, it's about solving the problems created by energy shortages and green transitions.
We've covered a lot today, from the energy supercycle trends driving LNG and lithium demand to the dual threat strategy positioning Condor Energy's Gooder for 239% upside potential. Whether it's LNG powering industries or lithium fueling the EV revolution, the opportunities are real and the timing is critical.
The big takeaway: energy markets are transforming fast. LNG is solving today's energy security challenges, and lithium is powering tomorrow's clean energy economy. With Condor Energies, you get exposure to both markets, creating a rare opportunity for growth in two megatrends at once.
Big opportunities come with big responsibilities. We've given you strategies to manage risk, options trading, ETFs, and AI-powered platforms to automate decisions. Whether you're a long-term investor or a short-term trader, the roadmap is here. Now it's up to you to take action.
And don't forget the business ideas we explored: AI trading tools, energy transition consulting, and lithium recycling businesses. These aren't just side hustles, they're scalable ventures tied to the trends reshaping the energy world.
Super cycles don't wait. By the time the headlines catch up, the biggest profits are already gone. So here's the question: will you act now? Or will you let someone else make the money?
Before we sign off, make sure you're connected. Hit subscribe on Spotify, Apple Podcasts, or follow us on Twitter for real-time updates. Don't miss the next big opportunity. We're here to make sure you're always ahead of the trends.
Before we wrap up, we want to remind you that the financial information discussed reflects market conditions at the time of this recording. Markets change quickly, and it's critical to do your own research and consult with a licensed financial advisor before making any investment decisions. Nothing in this episode constitutes personalized financial advice.
All investments carry risk, including the potential loss of capital. While we aim to provide valuable insights, past performance is not indicative of future results. Be sure to evaluate your personal risk tolerance and financial goals before making any trades or investments.
For transparency, we may hold or have previously held positions in some of the companies mentioned in this episode. Always perform your due diligence and consider speaking with a financial professional to tailor strategies to your personal objectives.
The music featured in this episode is licensed under standard agreements. Special thanks to the artist Vibe Tracks for the track Crystal, provided under the YouTube Audio Library license.
This episode is copyright 2024 by Finance Frontier AI. All rights reserved. Unauthorized reproduction or distribution of this content is strictly prohibited without prior written consent.
That's it for today's episode. Thanks for listening, and we'll see you next time as we uncover more ways to make money and stay ahead of the trends.